Hello everyone, welcome to our channel Good Business Location. What are we going to talk about today? Today we're going to discuss tariffs and whether they might lead the United States into a bear market. This includes which stocks might plummet in succession if this bear market truly begins, and how the current trend in semiconductors compares to leading companies from 2 or 3 years ago, such as. Share some of my own views and opinions. First, I want to introduce two companies, one of which is UNP. That's Union Pacific, which is considered a leading shipping company in the United States. Let's take a look at its overall candlestick chart trend to make a simple forecast of the market. First, it has been hovering at a high level, and indeed, since the beginning of this year, it has been consistently at a high level. It has been consolidating for nearly 4 months. Which other companies have similar candlestick patterns? Semiconductors are very similar. In the past 2 to 3 years, which companies also match this kind of candlestick trend? I'll talk about one that everyone surely remembers well, which is Amazon before the stock split. So, after Amazon completed its stock split, how did the overall market trend? I believe everyone has an idea. During the bear market in 2022, Amazon's overall pullback from its high reached, if I recall correctly, a low of around $83. When discussing the split, it was a 1-for-30 split, which means that from a price of around $3,300 to $3,700, it directly dropped to, if you calculate it based on the pre-split price, approximately $80. That means it fell from about 120 to around 80. So, in this case, the drop might be over 30 points. Now, everyone is looking at whether these stocks have such a pullback. Today, we are going to talk about tariffs on the sea surface, and let's take a look at a longer-term moving average. Okay, this is also about to level off. And also the monthly Kiki. It has come out, including an overall short position, which is relatively high. Moreover, if the short position is relatively high for this type of target, it can basically be confirmed that institutions have already started trading in it. Because firstly, these targets have relatively low turnover and transaction rates. So having no short positions means that basically the large institutional funds like investment banks are not optimistic about these targets. This might be the case with Union Pacific, which everyone might still consider. For example, if you look at Union Pacific, since the lockdowns in China in 2022, it has consistently shown signs of a major short position. As for when exactly to ask questions, to be honest, with the current situation, it's really hard to see when it will rise. And it might not necessarily rise at the moment. However, at this current point, everyone might have experienced a relatively significant rebound over the past 2 weeks. However, as you can see, it only took 3 days for the market to drop significantly, and now the overall index, if we look at the NDX 100, is still entangled around the 250-day moving average. But what news is there next week? First, there is Tesla's first quarter delivery data, and this delivery data is completely unreliable. Firstly, its sales in the domestic market are generally lagging behind, and overseas, those who wanted to buy Tesla have already done so. As for those who can buy afterward, that's uncertain. So the main feature of next week is likely Tesla, which means it's close to the end of its rebound, and might continue to pull back for a while. Another thing is the implementation of tariffs. Regarding the implementation of tariffs, does anyone think this will be the moment when the shoe drops? I don't think the shoe will drop. Let me share my perspective on why I think the shoe won't drop. Even if you consider the tariffs, let's assume that the decline from February to March has already fully absorbed the impact of the tariffs. So now, discussing the so-called issue of tariff implementation, can it really rebound? I think at most, if we take the NASDAQ futures as an example, it might touch the 250-day moving average again. This 250-day moving average, which can also be referred to as the annual line, has now turned from a support level into a resistance level. If it goes up again like last time but fails to hold and falls back down, then in the coming week, Tesla might drag down the overall performance again, and possibly the Philadelphia Semiconductor Index will also be a drag. Yes, the Philadelphia Semiconductor Index has already formed a large high-level pattern, which some people might not recognize. This is a 2B pattern, a structure that typically, after descending from this rounded E top, has a high probability of retracing back to complete the arc. Because you can understand this entire structure as a sell-off since everyone knows that the whole semiconductor sector is driven by AI. Later, when we look at the historical pullback of the memory semiconductor sector, if it truly wants to stabilize or form a bottom, it needs to be relatively okay. First, there will definitely be a relatively reasonable rebound here, with semiconductors reaching around the 4200 level. There might be a noticeable rebound here. If it's a bear market in the security sector, then the next overall moving average position, which is the 120-week moving average from 4200, is likely to reach the 3600 level. This expectation is definitely there. And everyone should believe and objectively understand this. The AI wave has already ended, and while these companies may still have some growth, their current valuations do not match this growth rate. Therefore, the market has started to decline in advance, including the subsequent rise of Trump. The new ruling party will definitely need to conduct a reshuffling of market positions. What is the shortcut for reshuffling positions? It is nothing more than some stock index futures or the exchange of positions between different parties within these stocks. Such large-scale reshuffling cannot be done at high levels. It can only be done during times of panic. This is also a point I want to convey, whether it's from the perspective of shipping or companies like Tesla or semiconductors, as well as the trends in K-line charts. They are currently insufficient to provide support. However, there's no need for everyone to be overly concerned because the fundamentals of these companies are still intact. If you really want to buy at the bottom, and if you have a relatively reasonable expectation, you can start gradually investing when the semiconductor reaches the 120-day moving average. There might be some losses involved, but if you invest periodically, try to extend the cycle to about 15 to 20 months. I think, generally speaking, with one round of periodic investment, there's a high probability of catching a bottom, even if this bear market is relatively large, because if it's a typical correction in the US stock market, it might just be an average correction lasting about 3 months. But if it turns into a more significant bear market, then it will last longer. A typical correction usually lasts about 2 to 3 months. However, when the year starts with a decline, it usually doesn't end well. Similar situations have occurred before, like this time when the year started with a decline. And in 2022, the year also started with a decline. This January didn't see any gains, and February also started with consecutive declines. I think there's no significant trickery involved. If we look at it pessimistically, this kind of hero might continue until it breaks below the 250-day moving average, forming a downward semicircle. I think it will go da-da-da, with the possibility of dead cat bounces or rebounds being the most likely rhythm in between. Objectively speaking, I understand that it might take about 8 months to start moving, so it's important to cherish your resources. Additionally, the market is not yet panicked enough, in my personal opinion, if we only look at the overall trend. If the release of weeks happens very quickly, then the entire market might gradually become strange. However, if weeks continue to consolidate here and then move up, keeping WEX at a high-level range, then this bear market could last for a long time. I would prefer it to rise in this manner because, for instance, whether it's bottom fishing or trying to catch a dead cat bounce in the market, these returns are quite substantial. However, everyone has also seen the market trend over the past month. I truly wonder how many people have made significant profits by shorting in this market. At this point, it's quite difficult to decide. And let me discuss with everyone how to approach this position in a more reasonable way, especially since we are now at the 250-day moving average. When you're stuck, there are basically 2 points you need to consider. For me, first, is this company strong enough? Second, can you still tolerate the position you're currently holding and continue to enjoy the performance of your individual stock target? There might still be a potential drop of around 30% to 40%. If you can withstand this, and you still have a relatively ample cash flow afterward, then there's no need to worry about these things. If you are currently stuck and don't have any cash flow, the best thing you can do now is to understand the situation. For example, I have a close friend who is in a similar situation, and there might be others in the market facing this as well. He has $300,000 to $400,000 tied up because he is quite confident and has a relatively abundant cash flow. His thinking is very straightforward. If $300,000 to $400,000 are stuck, then so be it. He might engage in some hedging activities on a daily basis. However, when a real bear market with a rapid downturn arrives, he plans to... When the index experiences a pullback in the range of 20% to 30%, he might add $5,000 to $10,000 every day as his cash flow is relatively abundant. This way, he can complete the overall position. It would probably take about a year, which he feels he can accept. I don't know how the viewers of my video feel about this. After discussing these leading companies like Tesla and Microsoft, it's actually a very pessimistic sign. You can look at the 120-day and 250-day moving averages. They have started to intersect. Some of you might not know what this intersection signifies. The previous intersection dropped from a high point, from 340 downwards. We calculate from the highest point to the lowest point after the intersection. The overall pullback was almost half. This was an intersection in 2022, as Microsoft's intersections are relatively rare. At this time, there was one intersection. In 2015, around 2015, Microsoft's influence might not have been particularly large. But you need to understand that around 2015, during this period, the entire US stock semiconductor sector was performing extremely wildly. The overall pullback magnitude was greater than 50 points, and after that, it was the financial crisis. At that time, I seem to remember it was the oil war, but I hadn't entered the market yet. Now, I'm just discussing a backtest with everyone. Generally speaking, there aren't particularly good things about bananas. The magnitude and intensity of the pullback are relatively large. I hope everyone has this expectation, which is a very core point. For example, dropping from a high point, Microsoft was at its highest at 465. So let's directly assume it will drop by 40 points. When Microsoft drops to 300, how much money do you have to participate in it? If you have 6% or 70% of your available funds to bottom fish in this target, then there's nothing innovative about it. But if you say it really drops and there's nothing you can do because you're stuck in it, then there's no solution. You just have to stand firm and take it. Is there anything else I want to share with everyone? Yes, I want to share. Recently, I developed a quantitative model which took me about 3 to 4 months in total. But I can show everyone something like this intraday market. We can trade in this area and still make a profit. Even with such a wide range, it can still be profitable. Once the program is fully developed, I might do a live broadcast during the market opening, so everyone can directly see the results. If anyone wants to use this program or software, you can send me a private message in the background. It's like a managed account and all the trades are intraday. I don't have much else to share with everyone, so today's sharing will end here. Thank you for watching. If you have any questions, feel free to leave a comment below. Bye-bye.